The more things change, the more they stay the same. And if there is one thing that the media and politicians all around the world are good at, it is dividing and polarizing people. One of the reasons why I love Bitcoin is that Bitcoin is neutral, unbiased, and truly for everyone. Money for your enemies, as it is sometimes said.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, Morgan, and welcome to episode 221 of the Bitcoin Bulletin Podcast. As usual, I am Chris, and I am coming to you from the pretty hot and muggy Space Coast of Florida. At least it is this time of year. I am once again recording from home, and while I've had extreme fortunate luck that our new German Shepherd puppy has not interrupted the podcast, at least in a way that you have been able to hear so far, she is getting a lot bigger, and she's been kind of a pill tonight. So hopefully that will continue to be the case, but I'm not holding my breath. And even if you can't hear her, if I seem a little distracted from time to time, it's probably because I have a 6-month-old German Shepherd dog puppy in the other room begging for my attention and doing so loudly. All right. I had a slight sense of trepidation preparing for this podcast, and even as I hit record just a second ago, and that's because depending on who you listen to, the big news of the day could be breaking news, could take a major turn soon, for better or for worse. And even which is which, whether it's better or worse, can be completely opposite depending on who is expressing their opinion at the time. One of the Bitcoin community's greatest strengths is it's always been that that regardless of where you live, who you are, whatever your station in life may be, we're all Bitcoiners. And every Bitcoiner you meet, or at least that I've met in real life, shares a common bond. I've never met a Bitcoiner, a pleb, that I didn't immediately hit it off with because of those common beliefs revolving around freedom and money and the role that money and Bitcoin in particular plays in it. But politicians, well, if nothing else, they perfected the art of polarizing people on everyday issues, things that would, if you stop and thought about it, wouldn't necessarily be all that dramatic. But it seems like they've developed a knack for making people hate even friends and close family members simply because all of a sudden they found themselves on the wrong team. And Bitcoin had been largely immune to this, and to some extent it still is. But if someone decided that the Bitcoin community was an enemy of their ambitions, for example, Bitcoiners all saw them, they saw them for who they were and for what they were, and it didn't change our beliefs, and we stayed aligned to Bitcoin's core principles, Bitcoin's core beliefs, our first principles, and didn't align what our opinion of the day was, the flavor of the day, the opinion of the day, based on keeping our identity, our ideology in line with whatever our team was. Recently, it feels more so like those who want to control us have been able to drive little wedges into the community. Maybe not big ones, maybe not significantly yet, but wedges nonetheless. And ultimately, Bitcoin and Bitcoiners will prevail, that good will triumph over evil, and Bitcoin is the most powerful force for good that man has ever created, at least in our history. But it is disheartening to see so many people obsessed with all these distractions when ultimately these are the kind of things that Bitcoin fixes. The reason why we're Bitcoiners is to fix these very problems. All right, end of rant. We do have a lot of interesting Bitcoin news to talk about today, but before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 901,840. Once again, I'm running thin on exactly how much DCA Wednesday we have left. It's starting to get late here on the East Coast of the United States. But Bitcoin is currently ringing in at a US dollar value of 104,640 US dollars. That means that this is the sixth DCA Wednesday in a row that Bitcoin has held a price of more than 100,000 US dollars. But it is about 4,000, a little more than 4,000 US dollars cheaper than it was last DCA Wednesday. And that means we're going to get more Satoshis for every dollar that we convert into Bitcoin. To be specific, we're going to receive 956 sats for every $1 US dollar that we convert into Satoshis. And that's about, that's exactly 36 sats per dollar more than we were able to stack last week. So that is cool, despite the fact that we're really, we've been above $100,000 for 6 weeks now, but really this is all-time high territory when you compare it to where we started this bull run at. When we started the cycle low, or I guess the cycle low was previous to the halving, but the crypto / Bitcoin winter low was in the teens, if you remember, and we're almost $100,000 more than what that low was, and that's pretty spectacular when you stop and think about it. Even though a lot of people are lamenting that Bitcoin is dumped to just 104,640 US dollars. For those of you paying attention to such things, Bitcoin's current price means that we're retaining that 2 trillion market cap, coming in at a market cap of 2.08 trillion to be exact. Again, that is 6 weeks in a row that Bitcoin has had a market capitalization of greater than 2 trillion US dollars. Of course, a lot of people out there are panic selling their assets and buying gold. And for those of you who do continue to value your wealth in gold, it will currently cost you 30.8 ounces of gold to purchase just one Bitcoin. As gold ultimately continues to trend to zero in Bitcoin terms, gold's still having a bit of a rally this year. Oftentimes, gold, has led Bitcoin in the halving, where we see a small spike in the price of gold, and then Bitcoin completely trounces gold in the months that follow. And of course, gold is having the best year they've had in decades. That entirely because the US dollar has had the worst couple of years it's had in recent history, certainly since the 1970s in the United States anyway. But I digress. For those of you who value yourself in something a little more practical, one Bitcoin will currently purchase you 5,852 large pepperoni pizzas from Papa John's. That is a pizza every day for more than 16 years, even though it's a couple hundred pizzas fewer than last DCA Wednesday. Again, everything trends to zero in Bitcoin terms. And if you just zoom out, the number of pizzas you could purchase for one Bitcoin has gone up exponentially since I began this podcast, just about 4 years ago. But certainly since that first Bitcoin Pizza Day, when Laszlo Hanya purchased 2 Papa John's pizzas for a whopping 10,000 Bitcoin back in May of 2010. So again, it's helpful to keep a long-term horizon, a long-term perspective, and to zoom out, as they say. The really great thing about doing a weekly podcast where we DCA into Bitcoin every week and we look at the statistics every week is that we're automatically zoomed out at least onto a week-over-week basis, instead of looking at the price and all the vital statistics on a daily basis or even a minute-by basis, or staring at price charts all day long, as so many of us tend to do, especially when the price is zooming or crashing, whether it's going up or down. Seems like we're always glued to those Bitcoin charts, or glued to your block clock if you have one. The metric that has been my favorite most of this podcast history, Bitcoin's 24-hour average transaction rate is coming in at a respectable 4.95 transactions per second. So despite the fact that the price is down over last DCA Wednesday, there is certainly a lot of on-chain activity, and we've seen the price fluctuate and recover a couple of times during the last week. There were multiple times where the price of Bitcoin went down to the $102,000, $103,000 range and then recovered almost to new all-time high territory. And we've seen a bit of, it's been an interesting day, but we've seen a couple of rallies throughout the day, with Bitcoin certainly not at its intraday low, according to the US dollar. And speaking of on-chain activity, the Bitcoin mempool is reasonably clear. In fact, there isn't even a full block of transactions pending in the mempools that I'm looking at. Clark Moody's dashboard is showing just 984 pending Bitcoin transactions in their mempool and his mempool. Of course, we've had 2 blocks in the last 5 minutes, so blocks are coming in a little bit quicker The last several blocks have come in a lot quicker than that 10-minute average, and that certainly helped clear out some of those transactions. Mempool.space has a few more transactions in their mempool, showing 1,001 transactions. But still, both of those numbers are the lowest I've seen scrolling back through my notes for more than a year. So that's pretty cool that so far in this bull run, in this halving cycle bull run, we haven't seen the kind of mempool bloat and the kind of increased transaction fees that we saw in 2017, for example. Now, there have been many improvements that have come along. Some would argue that some of them were more of an improvement than others, like Segwit, for example, and Taproot, that make transactions inherently cheaper than they had been in 2017, regardless of the level of activity on chain. But still nice that if you do have an on-chain transaction that you need to send, you can do so for relatively cheap. Clark Moody's fee estimator is saying that a high priority transaction needs to include a fee of 3 sats for VByte. And I think that's probably overkill because, like I said, there's not even 1 block's worth of transactions currently pending in the mempool. They are saying that a medium or no priority transaction, as long as you're willing to wait a day or a week, can include that 1 sat per VByte transaction fee, minor fee. Mempool.space is telling a slightly different story. They're saying any transaction, regardless of priority, only needs to include a fee of 1 sat per VByte. Again, that makes sense because there's not even a full block's worth of transactions pending in the mempool, and the last 2 blocks were less than half full. That works out to just 15 cents to be able to do one of the most powerful financial, to wield one of the most powerful financial instruments in human history, to be able to send a functionally unlimited amount of value anywhere in the world without a bank, without a third-party intermediary, and without anybody being able to censor you or to claw back that transaction, to say that you can't make that transaction or to revoke that transaction. So that's a lot of power for just 15 cents. Since the last DCA Wednesday, the difficulty that it takes to find a block has been adjusted. It was a downward adjustment. It got about 0.4% easier to mine the next block of Bitcoin. For those who do not know, Bitcoin adjusts the difficulty that it takes to find a block every 2016 blocks, which works out to about once every 2 weeks, with the goal of having blocks come in at an average time of 10 minutes between blocks. Of course, those blocks are found on a random basis, so that's why Bitcoin takes such a large sample size of 2016 blocks before determining whether that needs to be a difficulty increase or a difficulty decrease. We're currently 1,328 blocks away from the next mining difficulty adjustment, so less than halfway. And that looks like it's going to be a little more than 9 days from now on approximately June 28th. And currently, depending where you get your data, we're looking at another decrease of anywhere between 0.49%, so about 0.5%, to as much as minus 4.1%. A lot can happen in the next 1,328 blocks, but the reason why it's looking like it might be a particularly substantial difficulty decrease is because, the first about week of blocks, so the first several days, just about a week of blocks have been coming in at an average of 10 minutes and 27 seconds. Obviously, that is substantially slower than 10 minutes, and hence the forecast difficulty decrease. Despite that, though, the 90-day average of the estimated computing power securing the network has gone up again, showing that there are currently an estimated 879.3 exahashes of computing power securing the network. That is 7.2 exahash greater than just last DCA Wednesday. And last DCA Wednesday, I mentioned that we'd seen that the computing power has basically more than doubled since 1 year ago. 1 year ago last week. So in the previous year, the computing power securing the network had basically increased 275 exahash, which I guess was a 46% increase from 1 year ago. So not quite doubled, but a 46% increase is a significant increase in computing power. Real quick, I want to take a minute to thank those of you listening to this podcast on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen or by sending a boost. You determine the value you feel this podcast is providing you, and you can send some of that back in the form of Satoshis. Again, either by setting a fixed amount and streaming it as you listen, or by sending a boost, which is a shout out via a Lightning transaction where you can say hello, let us know what you think about the podcast, really say anything you want. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. And of course, when you do send a boost, we read it on the next episode. And we have one boost to read today. That is from Leggy, longtime listener. And Leggy sends 3,000 sats and says, "Thank God the boom is back. I missed it the last episode, and the voila was a disappointing replacement," with a smiley face. Leggy, it's a really good thing I read this because while I agree with you that the voila just didn't have the oomph, the flair that boom has, I have been contemplating since we switched from Cash App to Strike, setting an automatic DCA purchase for every Wednesday. And of course, then I wouldn't be buying in real time as I'm recording the podcast, so it would lack the luster of the boom of the purchasing in real time. But the reason why I was contemplating that is because Strike doesn't charge any purchasing fees if you have an automated weekly stack like that. So I did not set it, and I'm still mulling doing so. It's very tempting because saving on fees means we're going to get more Satoshis. But there's just something about making the purchase while I'm recording, while I'm talking to you about it. It's kind of the whole point of the podcast, I feel. So at least the DCA Wednesday series is stacking sats, so we might as well do it in real time. So for now, we're going to continue that tradition. And as long as I don't regress to the voila phase, the booms shall continue for the time being. So thank you for the boost, Leggy. It's always great hearing from you, and thank you from the sats. It's really cool knowing that you listen and that this podcast is appreciated. Speaking of our listeners, our geographic distribution of listeners is doing what I personally wish the Bitcoin Core Protocol would do, and that is ossifying a little bit. Our geographic breakdown of listeners has remained unchanged for yet another week. Our top 10 countries where our listeners are located remains as follows. Number 1 is the United States of America, so hello and thank you to all my fellow Americans out there listening in each of the 50 states. Number 2 remains Singapore, so apa kabar. Hello and thank you to everyone listening in Singapore. Number 3 remains Germany, so Dankeschön, mein Freunde in Deutschland. Number 4 remains Argentina, so hola, muchas gracias, amigos. Number 5 remains Luxembourg, so Dankeschön, or Morien, to those of you who speak Luxembourgish. Number 6 remains Canada, so hello and thank you to those of you up north. I'm still seeing quite a few Canadian license plates in Florida, which is a little odd. Normally, a lot of our winter visitors head back north around Easter, when the weather starts getting a little warmer here and when the snow starts to thaw up north. But currently, I've seen a lot of Canadian license plates and a lot of New York license plates in town this weekend. So I don't know necessarily why that has changed. I did hear on the Canadian Bitcoin podcast, Len and Joey talking about the number of Canadians that are just flat out leaving. So maybe that's some of it. Maybe there are people that already own a house here in Florida and have just decided they're not going back. Either way, thank you to those of you listening in Canada in numbers sufficient to make you the number 6 country. Number 7 remains our cousins across the pond in the United Kingdom, so hello and thank you to those of you listening in the UK. Number 8 remains Spain, so hola, muchas gracias, amigos. Number 9 remains our friends down under in Australia, so hello and thank you to those of you listening in Australia. And number 10, rounding out the top 10, remains Mexico, so hola, muchas gracias, amigos, in Mexico. Of course, we have listeners all over the world, and that is what makes it so flattering to do this podcast. It shouldn't be surprising because, as I said, Bitcoin is for everyone. And Bitcoin is more useful to people in countries that maybe have a smaller economy or a less reliable currency than we have in the United States and Europe. But it's still really, really flattering to know that I have listeners tuning into this podcast right now from all over the world. So hello and thank you to everyone, regardless of where you find yourself this evening. On to the news. Of course, the big news, other than the geopolitical tension in the Middle East, the big financial news was the Fed's decision on interest rates, which was announced this afternoon. Of course, the Fed held interest rates steady and indicated that they're going to have perhaps one interest rate cut only during the remainder of 2025. And this has left a lot of people perplexed, with many people accusing Jerome Powell and the Fed of playing politics. Noting, for example, how they lowered interest rates right before the presidential election in a move that most certainly benefited Kamala Harris, although not enough to help her win the presidency. And I would normally disagree with this belief because the Fed, after all, is a private company, and it's owned by the nation's largest banks. And first and foremost, their primary interest is in lining the pockets of the banks that literally own the Fed. I know they have a mandate, what they're supposed to do, but they're not. There's nothing federal about the Federal Reserve, and there are no reserves, as they say. They're a private company, and they're going to make decisions based on what they feel is in their best interest, in my humble opinion. Of course, nobody can dispute that there is certainly bad blood between Fed Chairman Jerome Powell and Donald Trump, with Donald Trump being aggressive in his calling out Jerome Powell on interest rates. But perhaps, is there something more sinister underlying the Fed's decision? Officially, as we mentioned last week on the last DCA Wednesday when the CPI numbers were released, CPI is officially cooling, coming in lower even than had been expected until those numbers were released last Wednesday. However, if you've been to a grocery store or out to eat at a restaurant recently, you know that CPI is complete horseshit. Even when they said what the highest inflation rating they had when we were at the peak of inflation, it didn't come anywhere close to mirroring what we were actually seeing as consumers. Just today, for example, I went out to eat and I paid $3.13 plus tax for a 12-ounce can of Coca-Cola. That is certainly more than 2% more expensive than it was last year, even though CPI is coming in reasonably close to the Fed's 2% target. On Friday, Parker Lewis chimed in on this with his version of a truer rate of inflation on Twitter, posting, "Update on the same ribeye in the same store I've been tracking for 5 years now. Annualized inflation over the past year equals 10.6%. And he goes on to break it down by price per pound. Average of 12% annual inflation since 2020. And that is certainly a lot closer to what I'm personally seeing when I go shopping or when I buy anything, whether it's groceries or whether it was going out to lunch this afternoon. But the whole reason the Fed gives for why they raised interest rates in the first place was to try and tame inflation. They're touting the cooling inflation, the inflation number, the CPI number that's closer to their official goal, but blaming their decision, their hesitation to lower rates on in uncertainty because of Donald Trump and the tariffs. Maybe that's just a shot back across the bow at Donald Trump for all the times he's called the Fed out. But I believe it's because they know that inflation is worse than they're saying, and they're not willing to lower rates right now and let inflation run extraordinarily hot again. Because it gets to a certain point where it doesn't matter what the government tells you, and that happened already. That they were trying to say, almost nobody believes the inflation numbers that have come out in the last couple of years. Everybody knows that eggs used to be like 89 cents a dozen and they went as high as $7 a dozen. Everybody knows what they used to pay for gasoline. Everybody knows what the cost of a house used to be. Everybody knows what the cost of healthcare used to be. Everybody knows that there used to be a 99-cent menu at McDonald's, and now you can't go out to eat, for less than $15 a person, even at the cheapest restaurants. So they're not fooling anybody, but it's my hunch that that's probably the real reason why the Fed is squeamish, a little gun shy about lowering rates quite yet. Maybe there's some politics there too. That certainly is probably the icing on the cake for them, but I think it's because they know inflation is running a lot hotter than they're admitting. All right. The other news, of course, as they say, is the price. And I mentioned that we've seen a whiplash in prices, even just intraday. Earlier today, I saw Bitcoin trading as low as $103,500 US, and then it rebounded to more than 105,000, somewhere around 105,300 before it pulled back a little bit to where we find ourselves now in the mid $104,000 dollar range. And speaking of price, over the weekend, a peer-reviewed study from the Journal of Risk and Financial Management started making the rounds. The study was titled A Supply and Demand Framework for Bitcoin Price Forecasting. But what has everybody talking is that their model predicted that Bitcoin could reach $1 million by early 2027, and that they forecast Bitcoin would be at $5 million US by 2031. That really shouldn't surprise anybody. If I had to just pull a wild guess out of the hat a year or two ago, I would have said I don't think Bitcoin was going to hit $1 million this cycle. I figured it would go up into the couple 100,000 range, maybe 250, maybe as high as 5, and that we would really break the $1 million threshold after the 2028 halving. But that was just a guess. And since then, getting the vibes that I've been getting, that we seem to be repeating in many ways what we saw in 2017, what I experienced in the 2017 bull run, I've mentioned it wouldn't surprise me actually now to see Bitcoin breach $1 million this year, despite the fact that even as early as January, we had already had people calling the Bitcoin bull run over after we retraced under 100,000 US dollars after setting the new all-time high back then in January. And then after we set another new all-time high with Bitcoin closing in on 112,000 US dollars, a lot of the same fudsters were saying, okay, well now it's over. And that was just a double top. I've said over and over again, even before the halving, that what normally happens, if history rhymes, if it doesn't necessarily repeat, but if at least it rhymes, we don't see the all-time high, the blow-off all-time high, until about 18 months after the halving. That's what happened in 2017. It's what happened in 2021. Even though we had the double top, the ultimate blow-off all-time high was in November of 2021, about 18 months after the halving. And I would expect to see that again this time. Nobody has a crystal ball. People react in funny ways. You know, I've said over and over again that Bitcoin was designed to thrive in chaos, that chaos was the inspiration for Bitcoin, and that things like what's going on in the Middle East are ultimately the things that make Bitcoin stronger for a variety of reasons. But normies tend to panic sell, and they tend to panic sell the only asset they can trade 24 hours a day and 7 days a week. And if things go sideways in that conflict overnight, well, guess what? In the United States, tomorrow is a federal holiday. It's Juneteenth. So the markets won't be open, and the only thing they can panic sell is Bitcoin. So it wouldn't surprise me if normies react to any increase in the hostilities in the Middle East with further selling. But if they do, that is a buying opportunity, in my humble opinion. As I say, BTFD, and even though we're over 100,000 US dollars, anything below the previous all-time high is a sale. If for some reason we dip below 100,000 US dollars again, that would mean that we'll get more than 1,000 Satoshis per dollar, which is a psychological level for me that I'm still grappling with, getting less than 1,000 sats per dollar. So I would certainly be happy for the opportunity to stack more cheaply, but there's been so much misinformation and so many people wrong about so many things. I think a lot of it is on purpose, especially since X started paying users for engagement. People have more of a reason to be dramatic and hyperbolic online, just simply for views and for clicks. One of the things that I'm disappointed with in the direction that Twitter or X has gone recently, but I guess we shall see. But it is my firm belief that regardless of what happens, we have not seen the end of this bull run, that we should expect to see the blow off top, if there is one, maybe in October or November of this year. And it's a distinct possibility with the institutions being a significant holder of Bitcoin now. That's something we didn't see in the last bull run. You know, we saw Michael Saylor starting to stack, but we didn't have the ETFs yet. We didn't have all the Michael Saylor copycats, and Michael Saylor certainly didn't own 1% of all the Bitcoin that ever existed back then. So, of course, the ETFs and the institutions will be slower to sell. Hopefully there'll be less panic selling. So maybe we see the super cycle, the mythical super cycle that I have heard at least someone predict every cycle going back to at least 2016. Firmly, I believe we haven't seen the end of the halving cycle, because even though the institutions are soaking up more Bitcoin, there's just something about human nature that there will always be price discovery. And when the supply of Bitcoin is chopped in half every 4 years, even though it's diminishing as the price of Bitcoin goes up, it's still relatively significant. And so there will still need to be a period of price discovery, and that will coincide around the halving, as it always has, for obvious reasons. All right, moving right along. Today, the United States Senate passed the so-called Genius Act. The Genius Act is a piece of legislation that establishes or attempts to establish a regulatory framework for stablecoins. While this is not a Bitcoin bill, it is another example of at least how in the United States the current government has solidly ended the previous admin's anti-crypto war, their anti-Bitcoin war, and that the Overton window has shifted radically in a very short amount of time since this January when the Biden administration ended and the Trump administration began. Of course, the bill still needs to pass the United States House of Representatives and then be signed by the president. So who knows what it will ultimately say, if it even ultimately passes. But the Genius Act mandates stablecoins have a 1-to-1 backing in cash or treasuries and monthly public audits, which I guess are positive developments if you're going to have regulation of any kind. It allows U.S. institutions to mint and transact in digital dollars legally, but of course this does not allow foreign and big tech issuers to do so. And in the States, yesterday, Ohio made progress on their Ohio Blockchain Basics Act, gagging on the term blockchain. That still lingers. Blockchain shouldn't be a dirty word, but because so many people spouted that whole blockchain, not Bitcoin BS a couple cycles ago, it's forever tainted in my view at least. Anyway, the bill, which cleared the House Technology Committee yesterday, was subsequently passed by the full House today in Ohio. It still has to go on to the state Senate and have the governor sign it, but it seeks to declare you have a right to self-custody, to protect self-custody, and to protect the right to mine. And it establishes a state Bitcoin de minimis tax exemption on purchases of less than $200 US. Obviously, that doesn't affect federal capital gains taxes, but it's a step in the right direction. I believe making the tax laws more Bitcoin friendly is the single most significant thing that the government can do to help promote Bitcoin, way more so than even a Bitcoin strategic reserve. I mean, that will hopefully add to nation state FOMO, which pumps the price. But the biggest thing that they can do to help us plebs and to promote the use of Bitcoin would just stop making it such a pain in the butt to use Bitcoin, as far as making every single transaction, regardless of how small, a capital gains event that you have to track and report to the IRS. So Ohio is looking to end that, at least as far as state taxes are concerned, and every little bit helps. So that's if this passes and is signed into law, it's a small step forward in the right direction. Of course, in the Bitcoin fixes this category, yesterday it was reported that there was a cyber attack on Iran's largest state-owned bank, Safa Bank. Gee, I wonder who did that. Where all of its databases were erased and its ATMs disabled, leaving customers without access to their money. And this is a reminder that not your keys, not your coins applies to fiat as well. Moving around the world, in Thailand, you may have seen the quote-unquote breaking news alerts today along the lines of Thailand exempting crypto capital gains. So what happened basically is that Thailand has implemented a 5-year exemption on capital gains tax for Bitcoin and other cryptocurrency transactions, as long as they're conducted through licensed platforms. Licensed meaning licensed by the government of Thailand. The tax exemption applies only to transactions made via digital asset platforms, as I said, licensed by Thailand's Securities and Exchange Commission. Transactions on unlicensed exchanges or offshore exchanges like Kraken, Gemini, or Coinbase do not qualify for this exemption. Participants must also adhere to anti-money laundering and know your customer requirements under the Financial Action Task Force standards. So who are the licensed cryptocurrency exchanges that this applies to? Well, apparently that's KuCoin Thailand. KuCoin is a leading global crypto exchange. They entered the Thai market when they acquired ERX and rebranded it as KuCoin Thailand in April of this year. There's also BitCub, which is Thailand's second largest cryptocurrency exchange, and MaxBit, which is a platform located in Thailand that, among other things, lists tokenized assets like Tether's tokenized gold. So Bitcoin bought or sold on any other platform still will be subject to Thailand's capital gains laws. And of course, this tax provision sunsets in 5 years and goes away. But again, it is a step in the right direction. Moving on to Spain, Reuters reported yesterday, Spanish bank BBVA tells wealthy clients to invest in Bitcoin. The article says Spanish lender BBVA is advising wealthy clients to invest up to 7% of their portfolio into cryptocurrencies, an executive said on Tuesday. In the latest signs, some banks are warming to a sector long avoided by mainstream finance because of its risks. Boo. BBVA's private bank advises clients to invest 3 to 7% of their portfolio in cryptocurrencies, depending on their risk appetite. Philippe Mayer, head of digital and blockchain solutions at BBVA Switzerland, told the Digital Assets Conference in London. A little further down, the article clarifies that the 3 to 7% advice currently applies to Bitcoin and Ether, but BBVA plans to expand the advice to other cryptocurrencies later this year. For the record, that is Spain's second largest bank, and while they're advising their clients to buy shitcoins as well as Bitcoin, again, this is just another example of that major shift in the Overton window, not necessarily with governments in this case, but with traditional finance. International corporate FOMO continues to accelerate. In Japan, fashion retailer Anip announced they purchased 50.56 Bitcoin for $5.3 million. That might not seem like a lot, but they were using proceeds from an 11 billion yen stock sale, and that they said that they plan to purchase a total of 1,000 Bitcoin by August, certainly more significant than 50.6 Bitcoin, and a move in the right direction, and certainly an acceleration of corporate FOMO, not just in the United States, but in other countries, in this case, Japan. Speaking of those following the Saylor playbook, on Friday, Michael Saylor, chairman of MicroStrategy, or now Strategy, posted something that you've heard me say numerous times on this podcast when he tweeted, "If it's not going to zero, it's going to a million." I think I went into that just last DCA Wednesday. It's nice to see that I'm not the only one saying that. Obviously, it's a no-brainer in my humble opinion. Adam Back chimed in, replying, 1 million Bitcoin it is then, as it's not going to zero, as I have a limit order at 2 cents a Bitcoin for all 21 million Bitcoin. Outbid Alistair Milne's 1 cent with a 2 cent per Bitcoin 21 million BTC live order on at Bitfinex. He posted a screenshot of his limit order. So there you have it. It's not possible for Bitcoin to go to zero because there's at least one purchase for the entire supply at 2 cents. That's amusing. All right, on to what makes today and every Wednesday special, and that is because today is DCA Wednesday. What is DCA, you might ask? Well, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, we set our equal portion at just $20 US. I wanted to keep it small and simple and relatable to the most people I possibly could. Maybe there are people listening where $20 is just more than you can come up with once a week, and so again, this is a you do you thing. Probably there are more people listening that are stacking more than $20 US, but again, that's a you do you thing. We chose weekly for our regular interval, once a week on Wednesdays to be specific. We started all the way back on Wednesday, July 28th, 2021, so just under 4 years ago. And in the 204 subsequent DCA Wednesdays, the 203 subsequent DCA Wednesdays, we converted a total of 4,060 US into a stack of more than 10 million Satoshis. That's 0.1 Bitcoin. In this case, 10,748,413 sats to be exact. Currently worth about 11,000 US. Not too shabby considering we've only converted 4,060 US. And that is because we've purchased at an average purchase price of $37,773.02. We started purchasing right between the two double tops of the 2021 bull run, and we purchased all the way up to the then all-time high of 69,000 and all the way back down to the low in the teens. And of course, we've purchased all the way back up, and we'll continue to buy the highs and the lows. That's the thing about dollar cost averaging. You buy without taking price into account. You stack regularly regardless of price. And to do so, again, today, we're going to be using the Strike app. Again, this is a you do you thing. Strike is not a sponsor of the show. We switched to Strike a couple years ago. We had been using Cash App for most of the last 4 years, but they more than doubled their fees on our small $20 purchase. So I went with a cheaper alternative. And again, that's a you do you thing. If I were purchasing larger amounts, $1,000, $10,000, what have you, the amount you pay in fees becomes more and more important. And so even Strike wouldn't necessarily be the cheapest option, unless, of course, you take it into account that you can set it and forget it, and you get free trades on Strike for automated investing, at least up to a point. Either way, we're going to use Strike. I already have $20 on Strike. I have $20.01, which is an odd amount to have on Strike. But we're going to purchase $20. So it's a matter of just tapping buy, entering $20, tapping next, tapping confirm, and boom! Just like that, we purchased another 18,909 Satoshis. That is about, just under 700 sats more than we got last DCA Wednesday, because the price of Bitcoin is pulled back, or is on sale, as I like to think of it. Those 18,909 sats bring our stack up to 10,767,322 sats, and it does raise our average purchase price a bit. Not quite as much as last week. Last week's purchase raised our average cost basis by more than $122. This time it raises it by only $119.41, because we paid less than we did last DCA Wednesday. That makes our average purchase price now $37,892.43, a heck of a lot cheaper than the $104,764.93 per Bitcoin that we just stacked at. And of course, as Bitcoin continues its march up and to the right, that is going to be an even better return. For example, when Bitcoin does eventually hit that $1 million mark, whether it happens this cycle or whether it happens in 2028 or some point in the future after that, our current stack, without adding a single extra sat, would have a US dollar value of $107,673.22. Of course, I mentioned every week that Adam back predicted a $10 million Bitcoin price, and if and when Bitcoin hits Adam Back's goal, our stack would have a US dollar value of more than $1 million US dollars. $1,076,732.20 to be exact. Fidelity was shooting for the moon when their director of global macro said that by the year 2038, they believe one Bitcoin will be worth 1 billion with a B US dollars. And if and when that comes true, our current stack of sats would have a US dollar value of more than 100 million US dollars. Absolutely mind-boggling to think of, but not more mind-boggling than thinking of Bitcoin at 100,000 US dollars when Bitcoin was only worth 300,000, $300 or less just a couple cycles ago. Either way, that would certainly put you in the category of all the news stories that we saw in 2017 when they would write up stories about the kid that took the $1,000 his grandma gave him for his birthday or for graduation and invested it in Bitcoin, and it was now worth more than $100 million. If you've been following along, stacking just $20 US a week for the last almost 4 years, if and when Bitcoin hits that $1 billion that Fidelity predicted, you would be in that category, having a US dollar value of more than $107 million. No way you could argue that was anything short of astonishing, considering now we've only converted 4,080 US dollars into Bitcoin, and we did so at just $20 a week. All right. It is time for me to wrap up this podcast and get it uploaded before we run flat out of DCA Wednesday. We're only a little over an hour left in DCA Wednesday. But as usual, before I go, I would like to ask you to do this podcast a solid and give us a 5-star review and share it with a friend or family member. That goes a long way towards boosting us in the search results. That means more people are going to find this podcast when they're searching for content to listen to. And who knows, maybe just by leaving us a review, some pleb in a country you don't live in that you've never met, will probably never meet in your life, who might think that they're too late or that they don't have enough money, that it's not worth the $100 or the $10 or whatever they have that they're contemplating converting into Bitcoin. By rating and reviewing this podcast, all of a sudden, maybe it pops up in their podcast feed, and you'll help orange pill a pleb on some far corner of the globe. You can also help feed that algorithm monster by making sure you're following us on Twitter or X. We are at BTC Bulletin Pod on Twitter. Of course, I also love hearing from you, so if you're not in the position to send value back to this podcast by sending a boost, please do so by sending me a DM on X. My DMs are open. I do reply to my DMs. And if you don't have Twitter, you can always send me a good old-fashioned email at bitcoinbulletin@protonmail.com. Again, that's bitcoinbulletin@protonmail.com. There is a lot going on in the world right now, plebs. In the grand scheme of things, Bitcoin doesn't care. TikTok next block. But immediately, in human terms, it can be quite dramatic. And so I empathize and sympathize with the people that are panic selling when things go bump in the night. Or worse, if you find yourself directly involved in that situation. So my thoughts and prayers are with all of the plebs all around the world, but particularly those who find themselves in conflict or may find themselves in conflict, depending on how things progress. But I would be remiss if I didn't say, before I go, don't forget to join us next Wednesday and every Wednesday while we keep stacking Bitcoin regardless of what's going on in the outside world and regardless of what the price of Bitcoin is. That's the beauty of dollar cost averaging. But either way, keep on stacking those sats, you sexy sat stackers.